All right, today is day 4. We'd like to begin to look at price more precisely, and we'll be looking at candlesticks today. If you remember from day 1, we mentioned that this chart you are seeing is actually a graph of price against time, and it can be depicted in many ways. It can be depicted as a straight line where you just connect points like you have on a dx dy graph or quadratic graph, as the case may be. It can be depicted as Japanese candlesticks, which is what I have on my screen. It can even be depicted as Hikinashi candles, and there are even some other forms of candles like the Renko bars, right? Some people even use the Kagi. All are forms of depictions of price movements. The most popular one and one used so often. In fact, if you perhaps download MT4 on desktop for the first time, you might see them as bars, right? These are close to candlesticks. You might see them as bars. What is popular and used by most traders are the Japanese candlesticks, and that is what we will be looking at. Now, I mentioned also that price either goes up or comes down. I want you to see this as a tug of war. There is that game we play when we're much younger, certain number of people to the right-hand side of a rope, and then another set of people on the left-hand side of the rope. Usually they are even in number or equal in number, and they try to tug at each other. And if you can pull certain number of persons beyond a particular line, then you've won the war, right? So in the market, it's actually a tug of war between buyers and sellers. If there are more buyers in the market than there are sellers, technically price is going to go up. And this is the same in even traditional markets. And if there are more sellers in the market than willing buyers, it's going to make price to come down, right? Also, I mentioned that this is a chart of price against time. I'm going to use the 5 minutes candle. Okay, maybe I should explain time frame before we proceed. When we say time frame, like for instance, this is 5 minutes, and you can see 5 minutes here. By the way, I'm not using an MT4, right? On an MT4, I explained yesterday, you could pick your time frame by simply coming here, and here I can click on 5 minutes here, right? So, but I'm using TradingView today. On a 5 minutes candle, what it means is that the lifespan of this candle is 5 minutes. That is, it starts and ends within 5 minutes. And at the close of 5 minutes, the candle will stop and a new candle will start, right? I'm going to use a 1 minute candle to help us understand it better. So I want you to look at the right-hand side of my screen. I'm going to circle that part out. You see this white stuff there. You see, notice how there is a timer there that is counting down. It's presently 34, 33. It's counting down. I want you to put your eyes there and look at this white candle, this white candlestick. We are going to observe it and see what happens when the timer counts down to 0. Depending on the internet connection, there may be a lag of 2 or 3 seconds, but we expect that once it counts down to 0, another candle will start, right? It just counted down to 0, and boom, another candle has started, right? Another candle has started. It simply means each of these candlesticks has a lifespan of 1 minute. When you're on a 1 minute time frame, it means each candle has a lifespan of 1 minute. And of course, 5 minutes time frame means each candle has a lifespan of 5 minutes. We go to a 5 minutes candle now, you see it's counting down to 0 and it started from 5. Counting down to 0, it started from 5. The same thing for 15 minutes. And 5 1-minute candles will give you a 5 minutes candles, right? 3 5-minute candles will give you a 15 minutes candle. So that is what time frame means. It means it starts and ends within a particular time. Every candle, let me quickly do this. Every candle has 4 parameters, right? 4 parameters. It has what we call the OHLC, the open, the high, the low, and the close. The open, the high, the low, and the close. And I will explain that using a drawing, and then we'll begin to look at it live in front of us. So a candle looks something like this, like you can see on my chart on the screen. Now, for a bullish candle, that is a candle that is buying. When a candle is buying, we say it is bullish, or we say it is a long candle. Maybe I should quickly state that here before we proceed. So if I use those terms, you understand. When we say a candle is bullish, it's the same thing as saying it's a buy candle. It's the same thing as saying we are going long, right? It is the same thing as saying it's an up candle. When we say a candle is bearish, it's the same thing as saying it's a sell candle. It's the same thing as saying we are going short, it's a short candle. And the same thing as saying it's a down candle. When I was a newbie, it took me some time to differentiate, this bullish, bearish, until I came across Baby Pips, and they gave me a very good example. If you picture in your mind a bull has got 2 horns, right? It has 2 horns, and the way it fights is that it bends its head down and tries to hook the opponent and fling it up, right? That's how a bull fights. It bends the head and the horns down, try to clip the opponent and fling it up. So when something is going up, we say we are bullish. And how does a bear usually fight? It will stand on its hind feet and try to press down its opponent, clamp down on its opponent. That is bearish. So when we have that, we say when something is coming down, we say it is bearish. You could, of course, use the other terms as you can see on the screen, right? So let's go back to our illustration. By the way, today's class will be a little bit long, so we'll cover as much as possible and prepare for next week. So if this is a bearish candle, if this is a bearish candle, right? Let me put it up there. If this is a bearish candle, it means it's a candle going downwards. It means it's a candle going downwards. I mentioned that each candle has basically 4 characteristics or points. This point here for a bearish candle, remember bearish candle goes from up down. Price is coming from up down. So this will be the open of a bearish candle. And this spot here, the tick body, this will be the close of a bearish candle. And this will be the high. This was the highest point price got to. And of course, this point here will be the low. This was the lowest point price got to. Right, so if this is the body of the candle, the information it gives us is that price opened here. And within the time frame, the lifespan of the time frame, if this is a 5 minutes, it means within that 5 minutes, when it opened here, there was some point during that 5 minutes where buyers were very, very bullish. They were very, very effective in the market. And they pushed price up till this point here, right? And after then, sellers came in and overtook the buyers and began to push price down. So the highest point price got to within the lifespan of that candlestick is called the high of the candle. Now, sellers came in and began to push price. It was a tug of war. Price was going up and down, a tug of war. And sellers at some point pushed it down up till this level, right? And that became the low. This was the lowest point within that hypothetical 5 minutes time frame, right? And while the tug of war was still going, price was at this particular point here when the 5 minutes elapsed, and then a new candle started. Because the 5 minutes elapsed here and the candle ended its lifespan there, that point is called the close of the candle. So here we are, we have the high, the open, the close, and the low of the candle. In contrast to this, we have a bullish scenario. In a bullish scenario, of course, price is going from down to up. It means in this case, it must have opened here. You see, the open for the bullish is the opposite side for the bearish candle. And of course, that means it should have closed here. But the high and the low remains the same. This is still the high. And this is still the low. Right? The only difference here is that the open and the close take the opposite direction. It means when it opened here, buyers were in control. And they started pushing price up. Somewhere along the line, sellers came in and pushed price up to this point. And that was the lowest point. Then buyers came in, pushed price up to this point. That was the high. And eventually, while the tug of war was still going on, the lifespan of the candle elapsed, and then it ended there, and that became a close. For a candle to be bullish, it means during the lifespan of that candle, buyers won the tug of war. For a candlestick to be bearish, it means during the lifespan of that candle, sellers won the tug of war, and therefore the candle will be bearish. If sellers won, depending on your MT4, in my own MT4 here, the coloration is white and black. Some other persons will have red and green, yellow and black, whatever. It doesn't really matter. You choose the color you want. I have chosen black and white. So again, I will want to give you some practical. To make it easy for us, let's go to 1 minute time frame. A new candle is about starting. As you can see the timer, we'll wait for it to pop up. Now a new candle just started. Notice that the candle started here, and in fact, it was initially black. Now it is in the middle, right? Buyers and sellers are pushing, right? Buyers are in control right now, and that's why it is white. Buyers are still in control. Buyers are still in control. They are pushing it up. Buyers are still in control, pushing. Let's watch and see. So price is going up because buyers are in control. Price is going up. That's the meaning of that. Let's watch and see. I want this to be done live. Buyers are in control with sellers coming at any point in time. Let's see. Well, the buyers won this tug of war. We'll wait for the next candle to to start. It's taking a bit of time, but that's my internet connection right here. So again, notice that immediately the candle opened, sellers took control, and that is why price is coming down. Now buyers are taking control, is bullish, it is white. Buyers are taking control so far, but initially it was sellers who took control. Now buyers are taking control and they seem to be pushing the price up. Will the sellers still be able to flex their muscles here? Again, let's watch and see. Let's watch and see. It's about ending. And we can clearly say that this candle is neither black or white because there was a stalemate in the tug of war. So basically, this is how candles are formed. Candles represent the global fear and greed of market participants. The candlestick represents the global fear and greed of participants. When people are fearful, they take action either to buy or to sell. Same thing when people are greedy, they take actions either to buy and to sell. I'll give a good example so you understand why this candlestick here is giving you a global representation of fear and greed. Let's say we are all in a hall about to, or we are all traders in the market. And there's a particular item we all love to buy. There's a particular parcel we all love to buy. And there is a rumor. Let's use Nigeria, for example. Presently, the price of premium motor spirit in some refuel stations has gone up to about 180 from the controlled 165. Right? Why are people willing to buy it at 180? There is the fear that I might not be able to see this product if I miss this opportunity. And there is further fear that it might continue to remain scarce and price will go higher. That's just it. So why price is going up is because we are fearful and we are willing to buy at a higher price. If nobody is willing to buy at a higher price, the price will drop. Right? So this candlestick represents greed and fear of people all around the world. It is practically impossible to predict what majority of market participants will do at any point in time. It's almost impossible. In fact, it is, for me to say, it's impossible to do that 100% of the time. However, we could look at their reactions over time and predict what they may do. And that will take us to the text we'll be using today to discuss Candlestick Anatomy. It's called the Candlestick Trading Bible. By the way, it gives, I'll drop this in the Telegram group shortly after this webinar. That term, the candlestick, was invented by Homer. Permit me, I will jump his first name. And he is counted to be the most successful trader in history. He's a Japanese, and that's why the candlestick is called the Japanese candlestick. Right? Now, let's leave the history of this man because knowing it isn't going to add anything to, it's not going to add anything to us, right? So we'll be looking at Candlestick Anatomy, and later on we'll look at Candlestick Patterns, market structures, and the likes. So one of the things I forgot to mention when we're discussing candlesticks is, let me quickly do that so that when I start using that terminology, it won't look strange. Remember, I drew a candlestick like this, right? This was what I drew. Now, this thick part of the candlestick is called the body, right? The distance between the open and the close is called the range of the candlestick, of the body of the candlestick. So this is a candlestick, right? Let's leave out the range for now. We might not use it in this class. So we have this as the body. Now, these tiny parts, these ones are called the wicks. Wicks, or some people even call it the shadow. The wicks shows you that price once got here, right? The wicks show you that price once got here. In fact, I want us to see real life, the wicks in play. I'm going to go to 5 minutes time frame where it might be easy for us to notice the wicks. We will be patient for like 1 minute plus for a new candle to start, and then we'll see what the wicks look like. But I want you to see how price keeps going up or down, depending on the pressure. But notice it just pushed high and the wick above disappeared, right? If it comes down just a little, if sellers come back down just a little, it will show a wick, showing that price once got to this peak, but sellers came back. You see, it has shown a wick right now, saying that buyers once pushed it all the way up, but sellers came and pushed it down. That point gives us a wick. Let me change this to an arrow, right? That point gives us a wick, right? Buyers are still pushing. Buyers are still pushing. Now, sellers pushed it downwards and it gave us a wick. I'm insisting on waiting for this candle to close. I want us to see how a new candle starts. And I must state here quickly, for Forex, perhaps not stocks, perhaps not synthetic indices and the likes. For Forex, the close of one candle is usually of the previous candle is usually the open of the next candle. So wherever this candle, whatever price this candle closes, the next candle starts from that same price, because price is a continuum, right? So let's see. I'm sure you can see the tug of war happening between buyers and sellers, price oscillating up and down. Once the lifespan of that candlestick ends, which is in the next 11 seconds, about, and this is a 5 minutes candle, the candle will close and a new candle will start. And I want us to see how the wicks and the body of the candle will play out. So this candle just ended its life. And here you see buyers exactly at that same point. I can put a horizontal line there. And you see exactly at where it closed, another one started. Sellers seem to be in control and they are pushing down. Buyers seem to be pushing back up. And there you can see the wicks. Well, the wicks have been enveloped right now. Boom, buyers came back through a wick. Sellers, buyers. Now you can see that wick. Wick or shadow, as the case may be, tells you that price was once here, but it could not be sustained, right? And it is very significant when we begin to look at higher time frame. You see, buyers just pushed it above the open price, and then it became bullish. Sellers are back in the market, and they've pushed it below the open price, and now it's bearish. So when price closes above the open price, it is bullish. When price closes below the open price, it is bearish. So here I've been able to make you see live the wicks and the body of the candle. So let's go back to the text we want to use. We will not bother ourselves with the history of candlesticks. Again, all of these things don't add to us. Of course, this is a summary of what I just explained: the open, high, low, and they call theirs upper shadow and lower shadow. It's just like the same thing I just mentioned. It wicks. So let's leave that. Candlestick can be long or short. It doesn't matter. If there are 5 minutes candle time frame, it means each of these candles took 5 minutes to form, irrespective of the size. Right, we'll be looking at candlestick patterns right now. And the first candlestick pattern, there are quite a few, but we discussed maybe just 4 or 5, because these 4 or 5 give birth to the remainder. So by the time you have the book, you will find that there are other candlestick patterns. You see the harami, you see the morning star, the gravestone, the dragonfly, but I'm going to discuss just 4 or 5 because dragonfly is a doji. Gravestone itself is a doji, right? All of those things are variations of the major ones. So we'll discuss the major candlestick patterns. It will help you understand as we delve deeper into how to read the charts and how to interpret them, right? So we're going all the way to page 15, and then we'll start from there. So the very first candlestick pattern we'll be looking at, chart patterns. Candlestick patterns are what we call the engulfing bar or the engulfing candlestick, right? And just like the English word is engulf, when something engulfs, it's like it takes over. You know, they say a house was engulfed in flame or something, or somebody was engulfed in rage. So engulf means it takes over completely, it's bigger than, right? And we have some pictorial illustrations here. So look at this. Before I come back here quickly, I have to quickly come back here again. I want to state, and just like you can see, that candlesticks on charts form from the left to the right, right? So this white one is the older one. The black candle, the bearish candle, is the new one. And then if a new candle is going to form, it's going to form to the right, not the left. So candles form from the left to the right. So the first candle here is a bullish candle. And you notice it has a smaller body. Then we have a darker candle, which is the bearish candle, right? Notice that this bearish candle is much, much more bigger than the bullish candle. In fact, you could practically lift up this bullish candle and place it within the range of the bearish candle. Because of this, we call this a bearish engulfing candlestick pattern. A bearish engulfing candlestick pattern. And I think I saw one forming right about here. Yep, we have an example of a bearish engulfing candlestick pattern happening right before us. It has about 9 seconds, and this candlestick pattern will form a bearish engulfing candlestick pattern where this candlestick, you know, engulfs the previous one. When you see a bearish engulfing candlestick pattern, it is a bearish signal. It is an indication that price may go down for a while, right? Again, I must state something here different from what you might have heard somewhere. And I usually give this illustration. So let's see what teams played the Champions League. What 2 teams played the Champions League? Anybody remember? You want to chat in the chat box? What 2 teams? I think it was I remember Liverpool or Man City or Liverpool was there. Anybody? I know Madrid won. They won against who? Thank you, Liverpool. So we have Liverpool and then we have Madrid. Is it possible for anyone to tell us what will happen minute by minute in the 90 minutes? Is it possible that could be anyone that could tell us what will happen minute by minute for the whole 90 minutes that the game took place? And the answer is no. And we are just talking about 22 players, 11 from both ends. And we have a whole lot of gambling sites, betting sites, and several other businesses wrapped around football, and everybody just trying to predict with some form of accuracy what is going to happen. And again, just like with anything around the world, whether online investments, whether trading, whether business, whether working in an office, the same thing happens. Majority has to lose for few to win. It's as simple as that. Many people go into this bet Nigeria, whatever the name is, and they lose. Why? It is very difficult to predict with precision what 22 players will do on the pitch. Let alone a place like Forex, a place like stocks, where you're trying to predict what over 10 million, what over 100 million people, what economies of nations will do. It's a Herculean task. And this is why I keep telling people that Forex or trading is a difficult way to make money. Same thing with online investment, right? But you could make money and money is there. But don't get into that rat race of trying to predict 100% of the time with precision what price will do. You can't, right? You can't. So here we have a bearish candle engulfing a bullish candle. It only shows us that there is the tendency that price will begin to go down. Why? Sellers are now overtaking buyers. That is what it means. It is not a 100% guarantee that price will come down. It is just an indication that there's a possibility that price will come down, right? So remember, buyers were buying and were going up, right? All of a sudden they hit a particular price and then price and it began to come down. It may mean that some money bags or majority of the traders in the economy or in the environment feel that this price is too high and we need to start selling. We need to start taking some of our profits. Let's say those guys bought here at $5 and price has gotten here to $7. And they feel, well, we've made enough profit. Now we think we need to get out. We need to sell to some new people so that we can take our profit. If the number of sellers are more than the people willing to buy at that point, price is going to come down. When price begins to come down, there's indication that it may continue to come down when you have a bearish engulfing candle. So what am I trying to say? A bearish engulfing candle is a sell signal, right? And it usually depicts a sell now scenario. Where would you most likely sell from? If a bearish engulfing is a sell signal, where would you most likely want to begin to sell from? There are 2 points you can sell from here. Number one, you can sell from the low of this candle, right? You can sell from that point. You can also sell from here, right? You can sell from the close of this candle. We Simply Pips, we try to sell from this point. So we have line A and line B. You can sell from either of them. We love selling from line B. But you know, price is presently here. And now we want to sell at line B. So what do we put? We'll put a sell limit, right? You saw why we discussed sell limit. We put a sell limit. So when price comes back to this point, we begin to look for opportunity to sell. But we can't sit in front of the chart waiting for price to get here. We just put the sell limit and take a walk. When price gets there, it picks us, and then it moves in our direction for a profit, or it goes against us for a loss. It's as simple as that. Or you could also sell exactly from point B, in which case you'll be doing the market execution. And we encourage this when the distance between A and B are very small, or is very small and can be said to be negligible, right? All right, so let's move to the next candlestick pattern. It is still an engulfing, just that this time it is the opposite one, and it's called a bullish engulfing candlestick. But before then, let's look at an example here for a bearish engulfing. Notice we have bullish candles and price was going up, bullish candles, price was going up. All of a sudden, we got a bearish engulfing candle, boom, right? And then price continued to sell to the downside. This is an example of when we use bearish engulfing candles. I'll give us more from a chart here. I'll be calling up my chart and then give us an example on H1 time frame. All right, so you see H4 time frame, and change the pair to AUD USD. Okay, so see here, price was coming down, coming down, coming down, coming down, coming down. We didn't have a bearish candle. It is a different candlestick pattern. So let me look for one. Okay, let's look for one that tallies with what we want to do. I'm cherry picking right now. So price was coming down. All of a sudden, you have a bullish engulfing candle here. Right, you see this candle bigger than this, and then this became a reason to buy, right? And again, price started going back up. Of course, you could also see, say you saw a bearish engulfing candle here, where this red candle, which is the bearish candle, is bigger than this bullish candle. And again, price began to sell, right? Until you got another candlestick pattern. So it happens often in the chart, but you don't just go around selling and buying. You wait for certain conditions. So we'll discuss that later on that strategy. So the opposite is also true, is a bullish engulfing candle, where the bullish candle is much, much, much bigger than the bearish candle. And just like the bearish candle, it is an indication to buy. The bullish engulfing bar or bullish engulfing candle is an indication to buy. It usually comes at the end of a trend. So let's see this. Price has been coming down. Price has been coming down. Notice here we had one bullish engulfing candle here. But do you notice that if you had bought, you would have lost this trade? No problem. Then you got another bullish engulfing candle, and then you would have bought and you'd have won this trade. And price went far, far, far. You would have made up for the loss you had here. When we get to risk management, we'll discuss that. But bullish engulfing candles are good points to begin to think of buying. It shows that the selling pressure has been absorbed, and buyers have now resumed their stance in the market. So that is that. We'll move to the next one. The next candlestick pattern we'll be looking at is called the Doji. The Doji is one of the most important Japanese candle patterns. It happens when the open and the close of a market of a candlestick appears at the same point, right? So notice I told you that a candlestick usually will have a body. Then it will have upper wick or shadow and lower wick or shadow. But there are times when, and if it is bullish, this will be blue, or in this case, white. And if it is bearish, this will be black. But there are some instances where the open and close are exactly at the same price or just not too far away. They will call this a doji. We call this a doji. In a doji, both buyers and sellers even out. Buyers didn't win. Sellers, neither did the sellers win. Is, a stalemate. Now, unlike the engulfing bars that are take action now candles, the dojis are a wait candle. They tell you to wait. They are indecision candles. As a trader, you are either a buyer or seller, right? Or a net buyer and a net seller, for those of you who might want to trade both ways. So when buyers or sellers are not, they've evened out in the market, you and I, retail traders, we shouldn't get involved. We simply wait, allow the tug of war to take a direction, and then we get in and follow with the crowd, follow with the winning guys. Follow the winning guys. So a doji candlestick pattern is an indication that price is at a stalemate and you should wait. We saw an example when we were looking at 1 minute time frame, right? We saw this candle here, which was basically a doji. So you could see a doji, you could see a doji, you could see a doji here. They are wait candle, my guy, wait, my guy, wait. We are not sure yet, right? We are not sure yet. Let them take a decision. Once they've taken a decision, follow them, right? That's the meaning of doji candle. And of course, the bearish engulfing tells you, I think sellers have resumed, and then you begin to sell. And the bullish engulfing tells you, I think buyers are back in the market, and then you begin to buy, right? So I've been able to explain that. So just know that doji is a wait. It's not a take action now stop. So here you have a doji, right? When we are discussing the engulfing candles, the bullish and bearish, I told you what to do to get in. I said if you have a bullish engulfing candle, you could buy from here or buy from here, wait for price to come down and buy. When you have a doji, what you can do is that you can box out that doji, box it out like this. Right, the range, just box it. Since it's an indecision candle, and then you begin to wait. If the next candle closes above, it means buyers won the battle, and then you can begin to think of buying. And if the next candle closes beneath your box, it could just mean that sellers won the battle, and then you begin to sell. But you have to be willing to wait, right? Again, you don't use this rule on its own. I would rather use a doji to take a trade in line with my trend, right? But again, you guys don't understand trend yet because we haven't discussed that. So we'll come back to it later. But here we are. This is an example. Price was pushing up, and all of a sudden here, it looks like buyers lost steam and some sellers came in. What would you do? You box out this candle, wait for price to make a decision, and price took a decision that, hey, sellers are in control. This is the sell candle, and then you could continue to sell and you would have made some money because price actually went down. What were you looking at? You were looking at the candlestick pattern and you spotted one that was a doji, right? So this is a dragonfly. It's just another form of doji, right? Again, it's called a dragonfly because it has a long tail and the open and close is above. Is a sign of bullishness. And there you have one. Now, okay, let's move on. So let's leave all these dragons and gravestone. They are just opposite, but they are basically all dojis. So we'll leave them. They are all dojis. The same rule applies. The same rule applies. The morning star looks like it's a candlestick pattern, but we'll not discuss it because for me, inside the morning star, I see a bullish engulfing in this case. So I'm not bothered about morning or evening stars. I see bullish engulfings and there. All right, the next one we're going to look at is the hammer. We call this the pin bar or the hammer, right? That's the second to the last one we're looking at. So we've looked at engulfers, where we have bullish or bearish engulfers. Then we've looked at doji, right? Again, we mentioned that it could be a dragonfly, dragonfly or gravestone, but the point is that it's a doji. And the next one we're looking at now is a hammer or a pin bar, and it looks something like this. It's basically like a hammer, long wick, then one small head, there, one small body. It looks like a hammer. It tells you it. And by the way, this a bullish hammer is a bullish pin bar. The bullish pin bar has a very long lower shadow, very long lower wick. Technically, I say a candle can be called a pin bar if the tail or the wick is at least 3 times the body, right? If the tail is at least 3 times, 2 to 3 times, right? 2 to 3 times the body, I will pass it for a pin bar, right? If the tail is beneath, it is a bullish pin bar. It means price came all the way to this point, and all of a sudden buyers came back and pushed this candle all the way to where it closed. It means everywhere here, there are buyers pushing it up, right? It was bearish before, buyers kept pushing it. So everything here are buyers. This is a bullish candlestick pattern. When you have a bullish pin bar is just the same thing like a doji. You box it out. You box it out and wait for price at either end. I have some persons that will count 5 pips below and 5 pips above and then put buy stops or sell stops, just like we discussed. But I would prefer you wait for price to close above, and once price closes above, it tells you that the buyers actually want this, and then you can continue your buy, or if it is the reverse side, your sell, right? That is a pin bar. It's called a hammer, right? But I'll prefer to call it a pin bar, so I can just say bullish pin bar and bearish pin bar. So this is an example. Price was coming down, it formed a doji, closed beneath, you continue to sell. All of a sudden, you have a long shadow that is about 2 or 3 times the body. And then the next candle form bullish, boom, you enter and start buying. That's an example of a bullish pin bar. Of course, just like we have a bullish pin bar, we have a bearish pin bar. The nickname is shooting star. Just like the other one is, the nickname for the other one is called a hammer. But they are basically just bearish pin bar and bullish pin bar. And it shows, it's a sign of sellers. It means buyers were in the market at some point in time. They pushed price all the way up, but sellers came in and started pushing down until the candle be closed bearish. This is a seller's territory, right? It's a seller's territory. Again, the principle remains the same. Box out that candlestick, right? Wait to see further confirmation for you to sell, and then you get in and ride for yourself based on your strategy. The last candlestick pattern we'll be looking at is called a tweezer. It's called a tweezer. Of course, I'm tempted to talk about the inside bar. It's very important, and one of our friends in the AQZ looks at the inside bar. It's just the opposite of a bullish engulfing, right? If it was a bearish engulfing, remember candles form from the left to the right, right? In this case, the bigger candle is by the left and the smaller candle is by the right. Opposite candlestick color, right? Opposite candlestick color. So you have the mother candle, which is the candle to the left, and then you have the smaller candle, right? This is called an inside bar. Remember, a bullish, an engulfer will look something like this. Will look something like this. You have a bullish candle, and then you have a big red black candle. This will be called an engulfer. Somebody's writing on my screen. Kindly stop that, please. Right? But in this case, this is the opposite direction. This is called an inside bar. Again, the principle remains the same. When you have an inside bar, whether bullish or bearish inside bar, you simply just box out the mother. Box out this mother. An inside bar is a sign of indecision. Sellers sold heavily, then buyers came in, but the buyers could not overtake the sellers. They could not come back and close above this big bearish candle. So it's a sign of indecision. It's just like a doji. So you'd wait. If buyers are able to form some other candles and come and close above this, it means buyers took control, and then you can continue to buy. If sellers came and closed below, it means sellers took control, and then you can continue to sell, right? So those are inside bars. So this is a bullish inside bar, and then we have a bearish inside bar. But the one I really want us to look at before we wrap up is called the tweezer. The tweezer is also known as a railroad candle, right? If you've been to a railroad before, you notice they have railroad looks something like this, you know, and there'll be some granites in between. But you notice that there are some metals in between, right, that divides this horizontal plane. And those metals are usually, you know, same height or thereabout, right? So that's why we call it railroad, right? So when you have two candles of opposite color, black and white, red and green, whatever, opposite color, and almost of the same height, it doesn't have to be precisely with, with a compass, exactly the same height, but close, almost the same size. When you have that, it is also a sign of indecision. Sellers were selling. Let's take this to mean distance. Sellers sold for 50 meters, and buyers came and bought again for 50 meters. So where are we? We are back to where we started from. It's a sign of indecision. Buyers or sellers, neither of them won in the last two candles. So what do we do when we have an indecision? Somebody put your answer in the chat box. What do we do when we have when we are in a state of indecision? What do we do? Buy, sell? What do we do? Put your answer in the chat box. What do we do when we are in a state of indecision? What do we do? Thank you. We wait. We wait. Why do we wait? Again, I must state this here. Why do we wait? You are a trader, and this is a private question, but I'm going to ask here in case some of you are willing to just make it not private. If you are to trade right now, if you are to open an MT4 account and you want to put in your own money and start trading right now, how much will you most likely put inside your account? Please, if you are willing to share with us, just put the figure in dollars, please. In dollars, please. Put the figure in the chat box. How much will you most likely put in your MT4 to trade with? How much can you afford to risk and know that, okay, this money, if it goes, it has gone? Put your answer in the chat box, please, if you are willing to share it with me. Try to drive on the point. Yeah, somebody said $100. Fair enough. Any other person? $50, 100. As a starter, I'll risk $50. Great, $50. All right, I think I've got enough sample. We have $50 and $100. Oh, right. This market, so many people push around lots of numbers. Permit me to also push mine. Is about $7.3 trillion. $7.3 trillion exchange hands every day, Monday to Friday, in the Forex market. In the crypto market, maybe 1.something trillion. I think the global cap dropped below 1 trillion recently. Let me quickly check. Dropped below 1 trillion recently on cryptocurrency. Yes, it's sitting at 950. It's sitting at 950 billion right now. Yeah, it got close to 2 billion one time, but so many losses. Anyway, so if the Forex market is 7.3 trillion every day, what is $1,000? Right? That $1,000 that you put in your MT4 and you are feeling you've put a lot of money, what is it? I mean, it will disappear in this market and nobody will know that you came. Your $1,000 is like going to Computer Village to go and buy a flash drive. And when you get home, you are telling people, oh boy, I went to Computer Village, and they knew that somebody visited them. Oh boy, nobody know you came. Nobody know that you came. Nobody, nobody know you came to Computer Village. Even if you go there to buy an iPhone, nobody. That is, whether you come or not, the market will continue. That is how big the financial market is. And that is why you need to be patient. In fact, somebody said that the financial market and investment market, online business, is basically a a systematic way of taking money from the impatient and giving them to the patient. Taking money from the impatient and giving them to the patient. So when you get a signal, and you remember, you are trying to predict, you are sitting down in one corner. I don't care if you are living in a 17-story building. You are right now listening to me in one corner of your room, just one corner, just one spot in your room, and you are trying to play God by determining what more than 10 million people sitting in their own little corners cut across the globe will do. These 10 million people are broadly divided into two. Some feel price will go up and therefore they are bullish. And the others feel price will go down and therefore they are bearish. Unfortunately, you and I have chosen the very difficult task of choosing the winning side. And we have no way of knowing if what we are choosing, if we are going to be in the minority or in the majority. And in this business, the majority lose, the minority wins. Now we don't know. So when you understand, like I was taking the first string class, and the very first question I asked them is, what is your number one task as a trader? And many people say to make money and many other things. And I said, well, from my own point of view, from what I heard from my mentor, your number one task as a trader is to protect your capital. Once your capital has been protected, then you can begin to add 1 cent on 1 cent, precept upon precept, step line upon line, and begin to grow. If you have $1,000, your money will get swallowed in this industry and nobody will know. You can get depressed. You may commit suicide. You can jump from Third Mainland Bridge. You can hate all the people in the world. Like I posted a video recently, the last video, and somebody came and was talking about a scheme where they lost money. You can lose anything. The market will not budge. They don't even know that you came. So when you have your $50 and you have your $1,000, all you need to do is wait. When there is indecision, simply wait. Don't take sides. You can, okay, can you tell me how you know which side to take? You can't know which side to take. All you need to do is wait. Wait for the big guys to slug it out. Once they've taken a decision, follow them. Shikena. Right? So, enough of the chart. When you have a tweezer, it simply tells you that it's an indecision. Again, what do you do to a tweezer? You box it out and wait. Wait for price to close at the other end. Again, I have some friends that don't even wait for price to close. They just go 5 or 10 pips and put a buy stop, and 5 or 10 pips and put a sell stop. Whatever happens, they take the repercussion, right? So in summary, what have we looked at? Number one, we've looked at engulfers. And engulfers are divided into bullish or bearish engulfers. And we said engulfers are take action now. They are take action now candlestick patterns. They're like, hey, the buyers are here. Hey, the sellers are here, right? Then, but I gave you 2 ways to enter. You either enter by limits or you enter by market. If you're entering by limits, you go to the range of the smaller candle. If you're entering by market, you just get in instantly. Number 2, we looked at Doji. And I said a Doji is an indecision candle, right? What you do, you wait. Number 3, we looked at pin bars. That's where we have the hammer and the likes. We have looked at pin bars. In the pin bars, again, is an indecision candle. And what do? We wait. In fact, I shouldn't shorten this. I should write it fully. We wait. Then we looked at one more. We had inside bars, which is more or less like the inverse of engulfers. And we also said it's an indecision candle, and then we wait. And the last one we looked at is tweezer, or of course, pin bars are also known as hammers. Then we had tweezers or railroad, right? Railroad or tweezers. Again, they are indecision candle, and then we wait. Can you guys see the majority of what we do in trading is waiting? And I must tell you here, if you are new to trading or if you are just midway into trading, trading is a boring career path. It's a boring career path. You spend more time waiting than trading. If you are here, you are trading, and every time you're always on your phone looking at it, and everybody's like, why are you always on your phone? Your battery is always there. I say, I'm a trader. You are trading badly. Traders wait. Traders wait. I started selling Bitcoin around December last year, and I fully got into selling around January last year. And some of my guys are asking me, Bishop, when will you buy Bitcoin? I said, I'm going to buy Bitcoin when Bitcoin gets to. Anybody in the chat box here who can tell me the price? If you've been following in Simply Pips, I mentioned the price I was looking at buying Bitcoin. Anybody who is an old member who has been following, put in the chat box. Nobody who is an old member here, right? I mentioned the price I wanted to be buying Bitcoin, right? Sometimes somewhere around 20K. In fact, there was a time I mentioned 29. Let me look at the charts again. I mentioned 29. Let me see. Clear all. Okay, I can't find Bitcoin here. I think I just changed. Let's look at BTC. Weekly time frame. All right. Okay, yep. I was waiting for it around 29. I was waiting for it around here. That was the last support for me. But the way at which it came, I said I was going to wait until I see a bullish candlestick pattern on the weekly, and it never ever came. I never saw a bullish candlestick pattern, and price continued to go down. So I am still waiting. Now I want you to see how many weeks I had to wait from around January or December, how many weeks I had to wait just so I could get a buy. And at the end of the day, I ended up not taking the buy. I had to wait half a year, half a year waiting to dollar cost average buy into Bitcoin. And even when the price got to that expected point, I still couldn't buy. So you notice all the candlestick patterns we gave, they are asking you to wait. Why couldn't I buy? How much do I have that I want to take sides in this market, Bitcoin alone has a market capitalization of $403 billion. How much do I have that I want to take sides? I'll wait for them to finish taking that. By the way, I've been selling. And why have I been selling? Price has been selling. And what should I do? Follow price. Just simply follow it. Here is the reason to sell. You got a bearish engulfing, and you never got a bullish engulfing again. Later on, yeah, I think I remember those of you the prayer for string class or so, the previous one, I mentioned how I got in here and then it went down and then I continued selling. The candlestick pattern is telling you sell, sell. No speculation. You can't predict what will happen. Let's move on. So we're going to do a small exercise right now. Okay, here are examples of tweezers. These are tweezer. These are an example of a tweezer here. Right, see a tweezer. Right, price had been coming down, coming down. This could pass for a tweezer somehow. Price went to the downside. Here's a tweezer, price closed up in the upside, and then you continue to buy. Now let's do a quick exercise before we begin to call it a wrap today. We'll look at market structure the next time we meet. So here are some candlestick patterns. I'm going to ask you to tell me the name of the candlestick pattern in boxes 1 to wherever I mentioned. I want you to put them in the chat box. We'll have 1 minute to put in our responses. What do you think is the candlestick pattern we have in number 1? What candlestick pattern is in number 1? Anybody, please. What candlestick pattern? I know it could be tough if you are just sharing it for the first time, but again, it's a good way to candlestick pattern we have in number 1. No, Brenda, it isn't tweezer. Candlestick pattern in number 1. It isn't a bullish engulfing because for it to be a bullish engulfing, the bull has to be bigger than the bear, right? The bull has to be bigger than the bear, right? It looks like an inside bar. Yep, it looks like an inside bar. I agree with that. It looks like a bullish inside bar, right? And how did I say you should treat inside bars? When you find inside bars, we said box out the mother, that's the bigger one, box it out. Wait for price to close above it, like here. When price closes above it, you begin to buy. Check it, right? What about candlestick pattern number 2? What do we call candlestick pattern number 2? Candlestick pattern number 2. Candlestick pattern number 2. Yeah, those are basically tweezers. Yep, tweezers, or you call them. Who can remember the alternate name for tweezer? Alternate name for tweezer? Yeah, railroad, right? It could be railroad, RR, just whether railway or railroad or something, just, yep. Number 3 could be dicey. It could pass for an engulfing, and sometimes you want to look like a tweezer, but let's call it a bullish engulfing. Let's call number 3 a bullish engulfing. And why is that? This black candle can fit into the range of the bullish candle. So that might pass for a bullish engulfing. What about number 4? What do you think number 4 and 5? No, 4 and 5 look similar. What do you think we should have in number 4 and 5? What can we call 4 and 5? What can we call 4 and 5? Bullish engulfers. Yep. We should be able to call them bullish engulfers. Hey, what about number 7? number 7. What do you think we should call number 7? What do you think we should call number 7? We have, it looks like a bearish inside bar. It's an inside bar. It's an inside bar. Based on the entry techniques I gave us, assuming price is actually where price is right now, should we have engaged in a buy or a sell as at this time? What should we be doing as at this time? Put in the chat box. What should we be doing at this time? Buy, sell, based on this inside bar here. What should we be doing? We should be waiting. We should be waiting because this is an inside bar. We'll box it out from the top to the bottom, and we are waiting for a close. Notice this candle didn't close. It just came, tapped it, and went back. This candle didn't close. That is why I technically don't like putting buy or sell stops. And if I must put, it must be some distance away, because price can come, tap it, and then go the opposite direction completely. We'll wait to see if it's going to close outside the box, either beneath or above, and then we begin to take our decision thereafter. Right? That's what we can cover so far on candlestick patterns, and you see them everywhere on the chart. Right? I'm not insinuating that you simply go to the chart and begin to look for these candlestick patterns haphazardly and take them. There are certain conditions that we call setups. We wait for setups. These candlestick patterns are actually entry triggers, which is why I'm saying wait or buy or sell now. They are entry triggers. We usually wait for what is called a setup. And I'll explain what a setup is in the next class. So the next class, we'll be looking at market structure. What we just looked at today is candlestick patterns. We'll be looking at market structure, where we look at the ranging market, the bullish market, the bearish market, and then we look at how to spot them, and then how to enter trades after spotting them using the candlestick patterns we have discussed today. I'm aware that the recordings for like 2 days haven't been uploaded. If I have the time tomorrow morning, Saturday, I'll upload them in their raw form. Raw form meaning that if there's anywhere spot or any time where the network wasn't so good, you might just see it being silent or blank. Somebody's editing and working on them. Once it's done, we will re-upload and pull down the old one. So I promise you guys, all things being equal, if I'm not engaged excessively tomorrow morning, I'm going to post 3 videos, the last 2 and the one for today on in our Telegram group. Invite your friends, get them here, and let's see how it will go. I'll stop recording right now.